Welcome to the deep dive. We're here to cut through the noise of financial reports, industry analysis, and really bring you the clearest insights.
That's the plan.
It's kind of fascinating how a company can deliberately slow things down, make some tough choices, and then pivot strategically to not just recover, but actually grow faster than before.
Yeah, it's like sacrificing a piece in chess, isn't it?
Hmm.
For a better position later on.
Exactly. And that's pretty much the kind of strategic play we're going to unpack today.
We are. We're diving deep into the Q1 FY26 financial results for Globus Spirits Limited.
Right.
Our mission really is to sift through their earnings call, the investor presentation, board meeting notes. All that stuff came out around August 4th, 2025.
Okay.
And give you, our listener, a shortcut to being properly informed about what Globus is doing in the Indian spirits market.
Think of it as your guide, yeah, to what really matters in these reports without all the heavy jargon.
Exactly. No getting bogged down.
So let's jump in. Starting with the big picture. Globus Spirits Q1 FY26. How did it look overall? Did that strategy actually work?
Oh, it certainly looks like it. The headline figures, they paint a picture of really strong positive momentum.
Okay.
Net revenue, for instance, came in at a mere $6,990 million.
Which is up.
Solidly up,
Mhm.
7% quarter on quarter, and 9% year on year.
Okay, decent top-line growth. But what really jumps out, I think, is the operational profitability, that EBITDA number.
Right, the earnings before interest, taxes, depreciation, and amortization.
That's
It
the-
basically shows core profit.
And it soared, didn't it? Ours $600 million.
Yeah, a huge jump, 40% up from the previous quarter,
40%.
and 20% higher than the same quarter last year.
So what was behind that? I mean, that's a much bigger jump than just the revenue growth suggests. What levers did they pull?
Well, that's a key question, isn't it? And the profit after tax, the PAT, that also tells a story. It hit ours $185 million,
Which is?
an impressive 194% surge quarter on quarter,
Yeah.
and still up 13% year on year. So really strong bottom line conversion.
And they managed debt too, right?
They did. On top of the profit figures,
And-
they cut debt by ours $400 million, net of acceptances.
So it's not just about selling more. It signals like a real focus on efficiency, financial health.
Exactly. Making sure that sales growth actually drops down to the bottom line effectively.
So if the overall picture is growth and efficiency, let's get into the engine room manufacturing, the backbone, as you said.
Right.
How did that segment perform? What about, say, capacity utilization?
Yeah, the manufacturing segment showed remarkable strength. Revenue was ours, $4,258 million,
Okay.
with EBITDA at ours, $222 million. And what's really striking there is the EBITDA jump 109% year on year for manufacturing.
109%.
That's a huge leap. And capacity utilization was key. It hit 81% in Q1 FY26,
Which is way up from...
way up from 72% in Q1 last year. And even, remember, it dipped to 67% in Q3 FY25.
Now, you mentioned earlier that this ramp up came after they deliberately reduced capacity. Can you expand on that? Why is that significant?
That's where it gets really interesting, you know? Historically, they ran much higher, like 90, 92% utilization.
Right.
But they consciously pulled back in recent quarters because the raw material situation was, well, unfavorable.
So they weren't just victims of circumstance. They made a call.
Exactly, a strategic decision. And now they're not just recovering, they're actively ramping back up. Management expects to get back over 90% by the end of the year, driven by demand.
So the demand is there?
Seems so. There's still a bit of lower utilization right now, they said, because of some tech upgrades for corn oil production. But the direction is clear.
That's a great example of strategic patience, isn't it? Waiting for the right moment.
It really is.
And the margin story here is also pretty compelling. EBITDA per liter jumped significantly.
Yeah, another fascinating turnaround. It basically doubled, jumped to R6 per liter in Q1 FY26, up from just R3 in Q4 FY25.
That's a huge improvement. What are they expecting going forward?
They expect things to stabilize, maybe average around R7 per liter, and importantly, with less volatility.
Okay, less volatility.
Yeah.
How?
This is the real aha moment, I think. It's about their strategic pivot on raw materials.
Ah, okay.
They're shifting heavily towards maize, especially as a primary raw material in East India.
Maize in the East. Why there? What's the advantage? Is it just cheaper?
It's more than just cost, it builds resilience. See, East India produces about 20% of India's maize crop,
Right.
and cultivation there grew 17% in FY26. So there's supply.
Okay.
And this allows Globus to do forward contracts, fix their prices.
Hedging.
Exactly. They've already locked in about 17–18% of their annual maize need right through to November, December.
At what price?
At 24.5 per kilogram. So this proactive hedging using local supply chains helps shield them from that wider commodity price craziness.
That's smart. Something maybe not everyone can replicate easily.
Possibly not. And it certainly helped that overall raw material costs did come down too. Broken rice was down 18%, maize down 20% from their peaks in March. That definitely supported the Q1 margins.
Okay, that makes sense. Real agility there. And speaking of strategy, what about that big project in Uttar Pradesh, the multi-feed distillery?
Right, the UP plant. That's expected to commission in Q3 FY26, so fairly soon.
And it sounds like a potential game changer for them in that market.
It really does. They're talking significant strategic advantages. Firstly, cutting the cost of goods by 13% for all their brands in UP.
13% is huge.
It is. And secondly, slashing customer service time from 5 days down to just 2 days in that key market.
Speed and cost, that could really shake things up competitively.
Absolutely. Think about it, potentially dominating India's largest spirits market by building this logistical advantage. It changes the game for organized players there.
And capacity.
Total capacity, including UP, will be around 335 million liters. And importantly, it's multi-feed maize, rice, molasses, giving them flexibility.
Plus the byproducts, right? Corn oil.
Yeah, that's another angle, value addition. Started in West Bengal, commissioning now in Bihar and Jharkhand. They reckon it could add like 20 crore to annual revenues.
Okay, so that covers the manufacturing backbone. Let's switch focus now to where the rubber meets the road, the consumer market, where the brands live.
Right. This part contributed, what, 39% of total revenues in Q1?
That's right, 39%, and saw strong growth itself.
And within that, the prestige and above segment, the P&A, that really stands out.
How so?
Just strong growth all around. Revenue up 50% year-on-year and 36% quarter-on-quarter. Volumes also surged, up 51% year-on-year.
And the really exciting bit, reading through the presentation, was that this segment is nearly at break-even. That sounds like a major milestone, maybe even ahead of schedule.
It absolutely is a huge milestone, and yes, seems sooner than expected. April and May were apparently already in break-even zone.
So what does that tell us about their premiumization strategy? Is this real structural change or just a temporary blip?
I think it signals a really successful shift. It looks structural, not just a fleeting gain. Their operations in UP and Delhi are already profitable in this segment.
Okay.
And they project West Bengal will follow by the end of the year.
There was that issue in Delhi, though, wasn't there? A policy change?
Yeah, in June 2025, it hit sales temporarily. But the key thing is, it seems to have normalized since then. Shows some resilience in their positioning.
And the portfolio.
It's quite broad now. 15 brands across whiskey, gin, rum, vodka. Spread across 9 states currently.
And they're looking to expand further?
Yep. Actively exploring 3 new states. Plus, looking at duty-free channels and the CSD network, the military canteens.
Right. CSD is always seen as strategically important.
And commercially attractive, they said. Brands like Montino, Smusky, and their current top P&A brand, Mountain Oak, are showing good potential.
Okay, so P&A is accelerating nicely, but what about the other side? The regular and others segment, the IMIL business.
Yeah, let's not overlook that. It's the Indian-made Indian liquor segment. It showed steady performance. Revenue grew 10% year-on-year and 5% quarter-on-quarter. And EBITDA margins held stable at around 17%.
Now, this segment, especially in UP, you flagged it as a huge opportunity earlier. Why UP specifically? What makes it low-hanging fruit, even with big players already there?
Right, UP. It's just massive. The market size is estimated around 10 million cases a month.
10 million?
Yeah. Globus did 0.13 million cases there in Q1, so huge potential runway.
And the policy environment helps.
Exactly. They benefit from a stable, open excise policy there that actually favors organized players like them.
But aren't there big incumbents?
There are large yellow players, yes, but crucially, they said the market isn't cartelized. That leaves room for companies like Globus to gain share.
Makes sense. And volume growth overall for this R&O segment?
Overall volume growth was only 1% year-on-year.
Yeah.
That was dragged down a bit by degrowth in Delhi and Haryana.
Oh.
But Rajasthan, which is a major state for them in this segment, saw 8% volume growth. Plus, they got a price increase there, 4.35%, and a price revision in UP as well.
So why should you, our listener, really care about this R&O segment when P&A is growing so fast? What's its role?
It's the resilient cash engine, as they put it. It supports the growth elsewhere, fast cash cycle, low asset base, It basically funds the investments in the premium brands.
The foundation.
Exactly. And it's profitable in its own right. They have established millionaire brands selling over 1 million cases a year like White Lace, Gumar, and Hairvancha.
Got it. Okay, moving beyond the core segments, Globus is making some other interesting moves. The beer venture, Globus Ansa India Limited.
Like the JV with Ansa Masel. They launched their Careed 500 milliliter strong beer in UP during Q1.
How's that going?
Apparently, initial feedback is positive, and importantly, management views this as a larger opportunity, not just some small add-on.
So a serious diversification play into beer.
It looks like it. Tapping into that huge Indian beer market, leveraging their existing UP network, it's about opening a whole new revenue stream.
Interesting. What about Bihar? That used to be a big market for them pre-prohibition.
Yeah, they're watching it closely. They used to have like 25% IM market share there.
Wow.
So they're working on being ready if the policies change, although there are still restrictions on bottling equipment right now. It's a watching brief, basically.
Okay. And capital allocation. You mentioned the UP plant. Any other big CapEx plans?
Not really, it seems. Beyond the UP project, they indicated no major capacity expansion spending for the next couple of years.
Focus shifting elsewhere.
Looks like it. Focus seems to be on debt reduction, consolidating the gains they've made, unless some attractive inorganic opportunity comes up.
So a period of digesting the growth, strengthening the balance sheet.
That's what it sounds like. A more mature phase, perhaps? Management emphasized sustaining the growth, but also enhancing capability, making sure the healthy top line translates to a healthy bottom line.
Choosing where to play based on their right to win, as they put it.
Exactly. Not just chasing growth everywhere.
Okay, so let's quickly recap then. Globus Spirits, Q1 FY26. Really strong financial performance overall.
Definitely. Driven by that manufacturing turnaround, the May shift, the efficiency gains, the potential of the UP plant.
And then the consumer side, that accelerated break-even in the prestige and above segment really validates the premiumization push.
Yeah, and the huge untapped opportunity still remaining in UP for their regular and others business, the cash engine.
It's clear, isn't it? The Indian spirits market is, well, it's complex. All these different state policies, consumer tastes, raw material swings.
The real tapestry, yeah.
Yeah.
And Globus's moves hedging raw materials, focusing hard on a key market like UP, it feels like they're creating a bit of a new playbook.
Indeed, which kind of makes you wonder, what are the broader implications here? If Globus can succeed with this disciplined yet agile strategy, what does that mean for other players?
Right. How do they navigate this dynamic landscape?
Could we see a future where, say, regional agricultural advantages, like that maize sourcing, become the key differentiator? Or maybe where deep, profitable penetration in one massive state like UP becomes more valuable than trying to be everywhere less effectively?
Interesting question. Something definitely for you to mull over as you think about the future of spirits in India.